Hello, my name is Neil Young. I'm the Managing Director of Elixir Energy Limited. We're listed on the Australian Stock Exchange and we're focused on natural gas projects. Our most important project is in Queensland, Australia, a state that exports gas to the world through LNG and also supplies Australia's domestic gas markets. Both are very highly priced markets, and we have enormous potential with that project. I'm now going to run you through our latest corporate presentation. Here's the company overview. So we are in the oil and gas industry, and the macro environment for us just now is excellent. First, in terms of prices, outside North America, global and Australian gas prices are very high, $8 to $10 US. Now, the energy transition that the world hopes for is proving to be very challenging. Gas is expected to increase in demand for many decades to come. Now, that has been demonstrated by corporate animal spirits emerging in the US last year with very substantial takeover activity. Those are large companies placing a bet that gas has a very long-term future. Now, security of supply is fundamental. The world is an increasingly challenging one. We see wars, choke points, contests between nations. Now, gas from Australia is very secure if you are a traditional LNG buyer from Japan or South Korea. Location is fundamental for gas. Our assets in Queensland are next door to infrastructure that connects two domestic and international markets. We have a low carbon footprint, and those LNG plants there have spare capacity that is growing. So our corporate strategy as a small company is to identify early stage projects, get into them. Natural gas is what we are focused on, and that's where we have picked up assets. In Australia, just after the Ukraine war, we considered that gas in our country would be more valuable, and we moved up quickly to pick up a large acreage position next door to assets owned by Shell and Australia's second largest gas company, Santos. In the longer term, we've been in Mongolia. We were the first to negotiate a coal bed methane production sharing contract and have been working in that country for a number of years. We leverage our technical and commercial skills to move quickly. That's our main advantage over big companies. We want to go where those companies will go later, and we believe we are being successful in that objective. Here's our team. Our board of directors is led by Richard Cottee as non-executive chairman. He's very well known in Australia in the energy industry and had a huge triumph a number of years ago when he led a company called QGC from a $20 million listing to a purchase by British Gas Group for nearly $6 billion. Myself, I've worked for companies big and small in Queensland, in Mongolia for many years. My background is commercial. Stephen Kellerman is our technical director, more than 40 years of technical experience in Australia, primarily for Santos. Anna Sloboda comes from the former USSR, finance background, worked in China, and enormously useful for our Mongolian asset in particular. Now, as a small company, it's sometimes difficult to work with big companies, but our track record on that front is excellent. In Australia, in the last year, we've done deals with two of the largest energy companies here, Origin and Santos, with respect to data sharing over our Queensland asset. We work with the world's largest service sector members of the oil industry, Schlumberger and Halliburton. Engage is one of Australia's largest companies that helps in drilling management. And last but not least, the Australian government is in effect a partner with us in our Queensland venture. They are providing an R&D tax credit in cash for nearly half of the cost of our current well. So here's our capital structure. We have a bit more than 1 billion shares on issue. Our cash position is healthy, including our R&D receivable. As at the end of the year, we had $16 million. I'm the largest shareholder in the company. The board owns about 6% of the stock. We are a liquid company. Our liquidity in the last 3 months has been nearly $300,000 a stock a day. For a company with a market cap of less than $100 million Aussie, that is excellent. So here's our Queensland project. We call it Grandis, meaning big in Latin. So here's the market context. Australia supplies East Asian LNG purchasers, Japan, South Korea, China, and others. Our position means that transportation costs are lower than our two main rivals in the LNG space, the USA and Qatar. Increasingly important in this world we face just now is that there are no choke points between Australia and those markets. We don't face issues like the Red Sea, the Panama Canal, etc. Now, Australia is a strong ally of Japan and South Korea in particular, and we have a strong history of many decades of reliability of supply to those countries, which they have always valued and now value even more. So here's a map of Southeast Queensland. It shows the excellent project location of Grandis. We own 100% of this. It's 1,000 square kilometers or 241,000 acres. On the map, you can see it's close to a hub called Wallumbilla, which is Australia's equivalent of the Henry Hub in America. That hub is both physical and commercial in nature. It connects to Gladstone on the coast, where there are 6 LNG trains, and also takes gas to the southern markets of New South Wales and Queensland. Market factors are now driving more and more work in this area, including by majors such as Shell. In Australia, there is a shortage of gas supply. Prices are high and expected to stay high. International buyers are also needing gas as contracts roll off, and at Gladstone, the current supply from CBM is in decline. This area here is what Wood Mackenzie are calling an emerging energy superbasin. That is the co-location of large gas resources, carbon capture and storage potential, and renewables. All of these are present here. The deal that we did with Origin Energy last year related to an overlapping CCS license that they have. They contributed towards our well costs in order to get data relevant to their project. So that was a win-win for us. They avoided a well, and we got a contribution towards our costs without dilution. So the Taroom Trough is a deep part of the Bowen Basin, an enormous Permian-era basin in East Coast Australia that hosts massive coal deposits, massive coal bed methane deposits, and in this section here, as it goes to nearly 4,000 meters or more in depth, huge, thick sections of tight sands and tight coals. The resource potential here is enormous. Shell has estimated in their licenses to have 3 TCF of gas. Santos, who are located to our north and south, have said there's multi-TCF potential. We've already booked contingent resources and prospective resources, and to our southeast, we have a junior company, Omega, who's booked 1.7 TCF. With multiple operators currently working in this zone, the chance of cracking the code and opening up this huge unconventional play is high. So here are our booked resources. Contingent resources, I discovered ones. We've got 395 BCF in a mid case. Our prospective resources are 1.3 TCF in a mid case. And we were very pleased to announce to the market in just the last few days that that number had in fact trebled based on work that we undertook on the recently drilled Daydream 2 well. Here's our imminent timeline for the first 6 months of 2024. We've been conducting analysis. Lab results have been enormously positive, and we've announced a couple of things on that front in the last month. We're well advanced in our planning, and within the next few weeks, we will clean out the well, undertake what are called defits, and then undertake a stimulation program commencing in April, then flow testing immediately thereafter in May. By the middle of the year, we will have hopefully de-risked this play very substantially. We have multiple goals here. We were aiming to target more than 500 meters of gross vertical interval in the Permian section. We're planning a stimulation program to cover now 3 targets. We are planning 5 or more stages of stimulation. We want to confirm the liquids content and the low CO2, and on the second front there, we have done so, and our announcement this week covers that. We aim to expand our contingent resources from both sandstones and coals. Our R&D plans, which have led to the government support that I've mentioned, include a number of things which are novel to Australia, but really leverage the experience of pipe gas plays in the States over the last decade or so. This is a large play. It's scalable. We see at least a 500 well development being possible here. So Daydream 2 was drilled just before the end of last year. This is the highest impact well our company has ever drilled. It went to more than 14,000 feet in depth. but was drilled under budget and on time. We had a gross interval in the Permian section of 607 meters. We logged 154 meters of net sandstone pay and measured an additional 65 meters of gassy coals, which we consider could also become pay in the future. We encountered an unexpected free-flowing zone. On the picture there, you see a flare that was not planned. At these depths, gas is not expected to flow. Our recent lab results have indicated as to why that is the case, and that has enormous potential upside for this traditionally just tight gas play. So now moving somewhat more quickly to our now second-tier asset, but still a very exciting one, the Nomgon coal bed methane production sharing contract in Mongolia. You can see from this map, we have a very large license area located just to the north of China, which explains why we are here in the country of Mongolia. China is the world's largest energy importer. It imports gas from the north, south, east, and west, and Mongolia is nearer to gas markets in China than any current supplier. Our acreage position is 7 million acres. It is very, very large, but this is not a remote area with no other markets. There are large mines, there are roads, there are railways, there are planned pipelines, and it's really quite exciting from that point of view. This was our foundation asset under current management. We own 100% of this, as we do in Queensland. We took Australia's CBM skills, the world's leading ones, to a virgin area and have had some considerable success. We made our first discovery, or the country's first discovery, in 2020. We worked all the way through COVID, and now we're working through a pilot production test. In coal bed methane, pilots take a long time to produce water and then ultimately gas. We got early gas, and you can see that there on this flare. That was from gas in the fracture system. The much more extensive gas in the cleating system will be released as we depressure the pilot here. And we're working on that through the course of this year. Mongolia, in the long term, also has enormous green hydrogen potential, and we were also a first mover here. We set up a project and formed an early stage partnership with a very large Japanese company called SoftBank. Ownership of the renewable assets changed in the course of last year, and that business is now owned by Toyota Tsusho, the trading house of the massive Toyota group. So this is a fascinating project, great partners, great location. It is a bit longer dated, and we'll see where it takes us. So here are our highlights. We've just drilled Daydream 2. Successfully, we exceeded all our expectations, and we're just about now to move to stimulation and flow testing in only the next few months to come. We have many key catalysts in 2024. We expect to add material resources, de-risk, and in a play of this size, location, and quality, we expect to be able to secure a high-quality partner to take it to the next stage. And that is also true in Mongolia. Our team is highly experienced. I'm the largest shareholder with a material equity position. We're an industry that has a demand for many, many decades to come, not only in terms of the product, but in terms of how secure it is. Our balance sheet is strong, and our 100% ownership in both of our core assets provides enormous optionality at our control to bring in partners to take them to the next steps. So that's it for Elixir Energy just now. If you're interested, we have many materials on our website, announcements to the ASX, videos, interviews, and of course, you can always contact me at the company to find out more. So thank you very much.